Michael Saylor and his company MicroStrategy was the first publicly traded company to invest in Bitcoin. Initially, he was ridiculed by the investing world, but then the world's richest man, Elon Musk, decided to do the same. Now, just a year and a half later, there are dozens of companies that have now decided to add Bitcoin and Ethereum to the corporate balance sheet as the institutional adoption cycle begins to take hold. And in this video, I've got some great clips as Michael Saylor will be taking us through first the 200x opportunity that he sees and why we are just getting started. Then the trade of the decade, where he talks through his plan where he will 50x his money, but more importantly, how anyone can do the same. And then we'll finish up with him talking through all the different vehicles that he looked at when deciding to allocate his capital. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, first up, there's probably quite a few people out there who believe they may have missed out on the crypto train. However, Michael explains why we are only about 2% into what's coming. Ready? Let's do this.
It's pretty obvious there's $100 trillion worth of monetary energy or wealth that would be better served to be sitting in a synthetic digital asset like Bitcoin than to be sitting in real estate or gold or equities that are currency derivatives or other kinds of weak currencies. So you got 100x opportunity or addressable market from here under, even without considering inflation. By the time we get there, it'll probably be 200x. So I don't think we're too early. I think we're 1-2% into it if you look at it weighted. If you look at it from a time point of view, if you're an institutional investor, the first 10 years of a crypto network, you probably have to just sit and stare and see if it's going to break. So it was engineered, January 3rd, 2009, but you had to wait until about 2020 before you were sure it wasn't going to be hacked, banned, broken, copied. And so I think 10 years later, it starts to become interesting. We're year 2 of institutional adoption, right? Year 1 maybe started with MicroStrategy bought $250 million of Bitcoin in August of 2020, and that runs about a year. Like we're 18 months into our journey here. So you're in the middle of year 2 of institutional adoption. There's 10 years of education, and in those 10 years, what happens at the end of year 1, well, Elon Musk gets involved, and then all of a sudden there's 24 Bitcoin miners that are publicly traded vehicles about now. There's another dozen companies probably come public. So you're watching the institutionalization of the asset class. We're waiting for guidance from the SEC, the FDIC. The executive order from the White House last week was a massive milestone. Biden's election was a massive milestone, but the executive order was a double massive milestone because that directed 18 agencies to figure this out. That'll be 24 months. By the end of the first Biden administration, I think we have 80% of the regulatory clarity that you need to understand this. That means that from the year 2024 to the year 2028, 80% has been figured out. And by the year 2030, maybe 90% has been figured out. And at that point, I think it's just kind of like a growth industry.
So he says there's about $100 trillion of investment capital better served reallocated to Bitcoin. And as Bitcoin is still under $1 trillion, that's about a 100x opportunity from here. However, if you account for inflation, then by the time we get there, it's going to be a 200x opportunity. Now, one of the charts I personally continue to refer back to, as it's great for showing the big picture and it eliminates all the short-term volatility as it shows where the wealth is currently being stored. As you can see, global bonds are a $100 trillion market, global stocks are a $100 trillion market, and Bitcoin is still under $1 trillion. And this is why right now he believes it's a huge opportunity. And he makes a great point that yes, we are 10 years into crypto, but we are only in year 2 of institutional adoption. So the big money is still yet to come. Okay, next up, Michael Saylor became a household name by being the first publicly traded company to invest in Bitcoin. And since then, he's used many different instruments to add to his Satoshi stack. Now, next up is a clip that's only about a minute and a half long, but you might want to listen to it a couple of times, as he's going to explain how he's leveraging 2% money to make 100%. And then this will also explain why he's buying as much Bitcoin as he possibly can. But more importantly, how anyone can do the same. Check it out.
A family can do this, a company can do this, a municipality can do this, and a government and nation state can do this. Everybody can apply this leverage. For MicroStrategy, we started with 250 million of investable capital, and we put it to Bitcoin about 18 months ago, and we have parlayed that into about $6 billion of capital in 18 months from 250 million through a series of a Dutch auction, equity offerings, convert offerings, debt offerings, and just today we did a asset-backed loan, and that's what we announced today. So the leverage here is you short the currencies. You basically borrow $1 billion at 2 or 3% or 1% interest, and you borrow that because the currency is losing 15% or 20% of its value a year. So when you grab $1 billion that's got a negative real yield of 15%, you already got $150 million a year benefit there. Then you flip it into a hard asset, buy $1 billion of property, and if the property is getting more valuable and more in demand, and Bitcoin's going up 100% a year on average for 12 years. So we basically we're trading something that costs 3% money for something that yields 100%, or something that's got a negative real yield of 15% for something with a positive real yield of 100%. You're arbitraging the difference. So we've done that every which way, and it's worked well for us, and it's worked well for our shareholders.
So will this turn out to be the trade of the decade, as he's essentially borrowing money at 2 or 3% and then converting it into an asset which is historically giving 100%? And if you follow Michael Saylor, you'll know that he isn't stopping. He's using cash and debt instruments to buy more every single month. And so he's not just 100% allocated, he's 500% allocated. So obviously, if you're going to do this, then you need to make sure that you've got the right vehicle. So with several different asset classes and hundreds of different investments that we can all choose from, how did he know that he was in the right vehicle?
With regard to whether we got the right vehicle, well, we looked at 25,000 different things. We considered art and real estate and commodities and every equity in the world and 15,000 other cryptos and every precious metal and every other strategy and all the derivative strategy. And I have experience with them all. And we picked the one that we thought was engineered to be the soundest treasury reserve asset. How do you know? Well, you spend 1,000 hours studying it, and you wait a decade to see whether it will fail, and then you wait for it to be attacked 10,000 times. And if it's the winner, it's not 100% certain. But what I would say is it looked better than every other alternative. And at some point, if you're going to lose 99% of your wealth in the course of one lifetime if you take the conventional strategy. So when you know you're going to lose 99% of your wealth, at some point you got to take a risk, right? That drives the exodus. There's a very conventional view, like equities are conventional stores of value. Well, equities aren't stores of value in Venezuela. Equities aren't stores of value right now in Russia. If the currency collapses, or if the counterparty is not trustworthy, then the equity is not a store of value. And I think that every investor today needs to be a macroeconomic analyst. If you don't take into account macroeconomics, then you can come to the wrong conclusion. And it wasn't the case before 2020. I think you could have had a conventional 60-40 portfolio, and you could have conventionally thought, equity is worth something and debt is worth something. But again, I put you in an extreme situation like Zimbabwe and the currency collapse, or Weimar Republic, Germany. 60/40 portfolios don't work.
Nope.
Conventional thinking doesn't work. Conventional thinking doesn't help if you're owning Russian exposure in anything in the past month.
Michael Saylor is quickly becoming a legendary figure in the crypto world. His company MicroStrategy was the first publicly traded company to invest in Bitcoin. He used his free cash to invest in Bitcoin. He then used debt products to invest in Bitcoin. And then most recently, he's now borrowed cash against his Bitcoin to, that's right, buy more Bitcoin. In his mind, he's executing a very simple plan. Borrow something at 2%, which is also losing 10% of its value each year, and convert it into something that's making 100%. And when you put it like that, you can see why he's buying as much Bitcoin as he possibly can. Now, just a word of warning before people go running off and remortgaging their house. There is risk with any investment, and this is not guaranteed. And I would guess even if he loses all the money invested through his company, he's probably still got a stack of cash 100 times larger than the average person, just in case it doesn't work out. So just bear that in mind. 5 years from now, Michael Saylor will either be called a genius and a visionary or just a fool, and only in hindsight will it become obvious. So, there you are guys, hope you enjoyed. Will Michael Saylor become a genius or a fool? Let me know what you think below. But for now, just to say, if you did enjoy anything in the video, then drop a like. And a big thank you to everyone who does. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.